Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Tuesday, October 9th, 2018. I was going to wait till the market opened to see how things settled, but I figured I'd start this one ahead. Well, the futures are trading anyways, and we can look at QQQ and SPY and in pre-market, although they'll probably be open by the time I wrap this video up, so we'll take a quick look there. But I just wanted to point out a few things I'm watching today and what my expectations are. Most eyes have been on the broad market lately. I will do an update soon on commodities. I might even touch on them in this video, at least the sugar trade that we recently closed out. But before we get into any of that stuff, let's just look at the broad markets and see what we're looking at here. Right now, I'm living in the world of 15-minute charts. If you followed my analysis recently, I've put a lot of emphasis on the longer-term charts, the weekly, the daily charts, and so that's formulating my bigger picture. And that is this: I think today, now it's hard to call these micro trends, the very near term, what the market will do today, what it'll do this morning. It's a little easier to look out, take a look at 60-minute daily charts and saying, well, we're probably going to go down from here to here, point A to point B, but how we get there, the zigs and zags in between, can be a little more difficult, obviously. Now, my thoughts are, as I covered in the video yesterday, I think we're at that point in the market. We'll probably have some consolidate. Well, we did yesterday. We got it. SPY closed flat. QQQ, NQ or NASDAQ 100 recovered a lot of the losses earlier in the day. Still closed down, but more of a consolidation day. This is a 15-minute chart, so let's just look at this right now. And again, really nothing I didn't highlight yesterday. We have bullish divergence. That's what led to this bounce. That was a catalyst for this reversal. Oversold, bullish divergences again on the intraday charts, and then you have this downtrend line. And you can see this is yesterday. This is about where we closed yesterday. We traded flat after the market closed. The futures traded flat. Moved a little lower this morning. I had made mention on the front page, not that this should matter at all, because I don't post my trades in real time because I'm way too active a trader. I do too many trades. I'm in and out. I will day trade in between swing trading and everything else. Sometimes I'm in and out of NQ, up to a dozen times a day, depending on market conditions. Usually not that much, but sometimes. So I just want to say that I've reversed that position. I covered it this morning and decided to go long here. And I think we're going to, and here's why. I think we'll see a little more upside today. And again, I'm leaning that way intraday. Now, it wouldn't surprise me at all. And I may position short at some point during the day if we do get a lift. So it wouldn't surprise me if the markets go green, even though I think we're still indicated to gap down. Yeah, futures are down. We go green at some point today, and then that gain is faded. So again, I was looking for about a 1 or 2 day, probably no more than 3 days, probably go down on the third day consolidation if my read on the market's right, if where we are is correct. So today, again, um, and it's not, I can't say with a super high degree of confidence, but that's where I'm leaning towards based on these 15-minute charts, based on how much we've come down so far, based on the fact that yesterday a lot of major stock indexes and in some key stocks, individual stocks that I follow, Apple being one of those of many, they all hit support levels and also had some bullish divergences on the intraday charts, namely the 15-minute time frame. So enough on that. That's just what I think will happen. But if it doesn't, these are levels to watch. Watch, there's our intraday low so far in pre-market. But yesterday's lows, obviously a big level. And watch this downtrend line. So right now we have a breakout and a back test on NQ. And you can see a series of horizontal lines there. Those are support levels. There's reactions that define those levels. Pretty much actually the top and bottom of the range. So here's what we have. Price support and then trend line support if we come down for another back test. Although I'm favoring right now at some point, or especially early in the day, a move up, build a little bit on yesterday's gains, and you can see my target level 74.40. If they get really giddy in bidding this up, I don't think it'll go that high, but we could go as high as 75.33. I'll get to the QQQ and SPY in a second for you ETF traders. Let's look at ES. Okay, this is the S&P 500 E-mini futures, ticker ES. Same story. I don't know why that divergence line isn't there. It doesn't really matter. I already highlighted this yesterday. Bullish divergence yesterday at the lows. But this one, the SPY, or the ES, I should say, hasn't taken out this trend line yet. You can see, again, where it comes off this high here. And, you had some reactions here, another reaction there. We hit it in the after-hours session, right about the close yesterday. Same story. This is where the markets closed, I believe, somewhere right around there. Move sideways, pump below it. So what I'm looking at is a breakout of this level. Would be bullish. We still have the divergence in place that was put in place. We're still above that divergent low. Doesn't mean it must play out. Remember, in a downtrend, if there's more to come, these little 15-minute divergences can get burned through. If it was a 60-minute divergent, or especially on the daily chart, I would put a much higher weighting on it. But with that being said, it's here. So let's see if we can take out these highs from, what was that, yesterday's trading? That was where we closed. That was the 7th. So that goes back to yeah, I guess that's Monday, isn't it? All right. So, well, more accurately, Sunday night. And then there's Monday's trading there. All right, so that's a level. Let me add that for you. If you're an ES trader, or you want to just replicate this chart, we have some resistance around that level, and also a level up here. And that's about, these are areas I'd be interested in and possibly and very likely reshorting or covering any longs I'm going to take today. I'll just trail up the longs. If I'm stopped out this morning, if we punch on down in the open, I'm going to keep stops relatively tight, relatively speaking. And that's another thing I wanted to bring up. Here goes the market. Market's open now. In the trading room, I see some frustration, and trading is it's very lucrative, usually for me in times of volatility, but it can be very frustrating. And if I could get any advice, I can't give specific investment advice. I'm not licensed in that capacity anymore, but generally speaking, the advice that I would give to those of you having a tough time in this market, whether you're trying to go long or short it, is keep in mind that when volatility spikes, when trend lines break, like we have here, sell signals, support breaks, all of a sudden you're going from little point 0.3% gains and losses, little tiny candles on the daily charts, to these big intraday swings where the market's up or down, you know, 2% or more, or sometimes you have an intraday swing of 3% or more. So what you do to keep it simple, and I do see a lot of traders like the leverage ETFs. If you're comfortable with leverage, use it, but remember that leverage cuts both ways. So I guess where I'm going with this is factor in the volatility, factor in that if you get the call in a swing trade right, you're going to make above average gains in a relatively short period of time. In other words, if the market's about to drop, or 10% off its highs, we're already down part of the way there, and you're swing trading, let's say SQQQ, the 3-time leveraged, well, then you're looking at making a roughly a 30% gain there. Now, keep in mind, okay, this volatility cuts both ways, and so do the losses if you're stopped out. You're leveraged up 300% on your position. Keep your position size commensurate. Do the numbers, do the math on what will it cost me in dollar terms if this trade goes against me, and if my stop is right here. And expect that and be comfortable with it. So what I'm trying to say is, if you're having a tough time, with the market, your emotions are going high because you're seeing these big gains come and then a race quickly and losses stack up. You pull the trigger and then the market turns around on you. Keep your position size small enough that you can look at the bigger picture. Don't worry about this intraday stuff, 5-minute, 15-minute charts. Look at the daily and 60-minute charts and weekly charts. And if anything changes in the bigger picture, I'll let you know. So I still think there's some more downside to come over the next week, possibly next several weeks. I may be wrong, but that's my view. And if it's your view and you have a position a short position on the market, or you're going long, just keep in mind volatility's up. Keep that position small enough that you can stay in the game. And, I always say you should have a trading plan going into every trade. And I am a flexible trader. I'll have a trading plan, what I'm going to buy, where I'm going to buy it, where I'm going to stop out, and where I'm going to take profits. But I'm also flexible. If the charts change during that, if something compelling tells me, hey, I'm not stopped out yet, but all of a sudden I'm not liking what I'm seeing here in the charts, I think this trade's going to reverse, I'll modify my trading plan, close that trade early. Likewise, on the flip side, if I'm seeing more and more, let's say I'm short the NQs or QQQ, and more evidence is showing me that we're probably going to drop beyond my minimum targets, I will extend and hold that trade, give it a little more room. That's what I talk about being flexible. So here we go. The market's open. So far, a little rejection there on the SPY on the off the that trend line. So watch this if you can replicate that. I'm sorry, that's ES, and let's get to SPY and look at that in a second. Or let's just go ahead and do that now. All right, SPY. Let's see, SPY. Here's the 15-minute chart. And there's the levels I told you yesterday, looking for a bounce up here. These again this is my bounce target zone. These are minimum targets here. So we hit that 288.23 level and we pulled back, and this is where I think, as I showed you, futures went down overnight into the pre-market, but this is where I think we come up. So we broke out, and so what I think is happening here, and you can see, these price targets are, even if this isn't the final stopping point, each level that I have is a resistance level where I think a reaction is likely. So this was the first wave up, and we had a little pullback here, maybe more to go. Maybe this was a top, but I think we're going to get another thrust up, and I'm targeting somewhere in this area here right now. We'll see if we can get some traction, depending on how the charts look, but around that 289.12 to 289.40 level, and I really think this would be a nice level to add back some short exposure. If you're not short, bulls want to see that level get taken out. It's pretty decent support. You can see all the reactions over here, here, and it's also the 61.8% Fibonacci retracement. So this zone comes in right around the 50%. And again, I covered those levels yesterday. So there's the 15-minute chart showing you the bullish divergence where we're at now, and here's QQQ, and same story on the 15-minute chart. Let's see if my annotations load. Okay, there they go. So that's it. Pretty, there's our downtrend line, there's our divergent low, and we haven't even hit my minimum bounce target. So, and this is my preferred trading proxy. Why? Simply because you get more juice. You can trade SPY. Especially if you're a little more conservative. I can't tell you what to trade, but I like NQ. If you get the call right, up or down, you're going to get usually a higher percentage move than the ES or SPY. So there it is, 180.52 minimum bounce target. Ideally, I think we're coming up probably this 181.50-ish level today, and anything much above that, I will most likely or almost certainly be covering if and when we are selling my long that I said I reversed to today, this morning, selling it. We'll see. I'll have to see how this thing plays out. But 180, 150-ish, if we get there, I may be out and then looking to reshort there. But again, I could finish this video and be short again. So don't go by what I'm telling you. I'm looking at now. As I say, the markets are dynamic, and so is my analysis. And I'm looking for a little more upside today. We've already gone green now. You can see on QQQ. So haven't done so yet on SPY. But I think we will today. And that's it. So we'll see what happens if we continue down. Keep in mind, we can. There was some big time, or in my opinion, some pretty big technical damage done on the charts, daily and weekly charts, some sell signals. And this has been a crowded trade, especially those top heavy market leading FANG stocks. And I've talked about this for a while. The potential is there. There's a lot of ingredients, excessive bullishness, low short interest, all these things that can cause a quick swoon down. It's in the markets, but so if we reverse suddenly today and start taking a dive down, it wouldn't surprise me. It's not what I'm expecting at this point. Maybe later today, we'll see what happens, and I think I'll wrap it up here. Well, no, you know what I'll do for members, since it's a member-only video. A couple other things I'm watching. I've been trading pretty much quite a bit recently. Crude, I still think crude's going to head lower on this. This is a 60-minute chart. Just real quick, we have, this is what I look for. These divergent highs and then trend line breaks. Divergent highs warned of an impending correction. We had a divergent high right here. It's not drawn. If you draw a line from these peaks over to there, but we didn't have a sell signal. But here we had a trend line break. There's your sell signal. There's your divergent high, trend line break, little sell signal. It doesn't look like much, but if you trade CL, you'll know that's you put several hundred, maybe $1,000 or more in your pocket per contract on a little drop like that. There's another pretty big divergent high, and we found trend line support. You can see the trend line broke down and boom, back test. And not only back testing the trend line, we're also back testing the 74.90-ish support level. So I think CL is an objective short there around that 74.90-ish level with a stop not too far above, because it can continue to backtest the trend line for a while, but I want to see it stay under this 70, let's say under the 75 level. So that's CL. Also looking at the PPO rolling over, poised to make a bearish crossover. That's what you want to look for, those bearish crossovers. They usually indicate a top is not far away. And also probably doesn't matter now, but I just want to point out I don't know where that trend line went. I had a little divergent high drawn there before, and that led to that correction. So, all right, that's CL, and there's another one that I've been watching and trading lately is natural gas. There was a nice trading up this morning. I was up earlier, saw it up 3% right here with this divergent high. I was able to fire off a short there. Let me add to it. This chart here, just add so you can see right there we had this little additional divergent high right there, and so far they faded that, and you can see we have support around this level. That's where I'm targeting, just a little bit above there. Hopefully we'll go down a little more. I'll get filled on that. And then if we can break through there, there might be another shorting up if that level goes all the way down here to about 3,108. I think that's at. Yep. And then 3062 would be the next support. So those are potential levels. And here's a big level if NG comes all the way back down here, about 2982. Yeah, we'll wrap it up here, but remember, downside targets, just look at some of the recent videos. If we break what we're looking for, we need a break and a daily close below this uptrend line and SPY and all the other levels I've highlighted recently on QQQ, SPY, and QES. And if those break, I've already covered my longer term swing targets, and that's what I'd be looking at today. Because I think when we break, if we start to take another impulsive dive down, we'll see another at least 1 or 2 days of impulsive selling. So I'm not so focused on the intraday shorts for the next move down. In other words, I'm trying to game a bounce here and then get back in short for a swing position that I'll take home overnight. This, going long here will probably almost certainly be a day trade where I'll be out by the end of the day. All right, we'll wrap it up here. This is Randy Finney with Right Side of the Chart. Hope you enjoyed it.